So why don't I introduce myself first? My name is James Godfrey. I'm Intergalactic Head of Banking and Lending at GDA in Toronto. Although, as you probably guessed, I'm not originally from Toronto. I had 35 years in the international financial markets, running some of the largest trading desks, credit trading desks in the world. We've got Zach, who is the COO at Mex Digital. That's the digital arm of Multibank. Says where they aim to create accessibility to the most progressive and sustainable financial instruments of our time. We'll be grilling you about that shortly. They are the arm of Multibank, the digital arm of Multibank, one of the largest FX platforms in the world, daily turnover in excess of $7 billion. We've got Johannes. We have one or two technical difficulties with his screen at the moment, but he's going to be joining us in a second. It says Johannes 49. I didn't realize you weren't yet 50, Johannes, but thank you. I shall use that against you. Is a hands-on enthusiast and serial entrepreneur, investor, and experienced financial professional. He's the principal of Staithe Capital. I've known him for some years. He's got over 25 years' experience in corporate finance advisory. And we've got Ori. Ori is head of NFT issuance at GDA. He's one of the world's leading lights in NFTs, at least at selling them, from what I can gather. And before joining GDA, he worked at Goldman Sachs and at TD Securities in the capital markets, and he's had a consistent focus on blockchain integration, sales, and trading. Right, gents. Johannes, can you hear us?
I can hear you beautifully well.
Wonderful.
And
thank you.
It was wonderful seeing the sweat on your forehead by pretending of not being able to talk to you.
Oh, dear. Well, gentlemen, what can I say? Thank you very much for joining me at various hours of the day. Actually, you're all at sensible hours of the day. It was only me that had to get up early. So the future of financial markets. And I've put a few questions together. And the first question says, does the panel believe that the mainstream financial markets will go blockchain-based at trading? And if so, which ones and when? And since you're the biggest marketplace here, Zach, I thought I'd start with you. Do you think foreign exchange is going to go blockchain-based?
I think it's going to have to. With the decentralization and transparency that blockchain gives, it's imminent. As ourselves here at Multibank, as you mentioned, we offer FX and CFDs. We already deal with certain banks and liquidity providers where we're settling on a day-to-day basis using USD or USDT on a blockchain internally within certain banks. So it's actually, I think it's already happening. And I think as time goes by and people see how much easier it is to use and quicker, the adoption is just going to increase, extremely fast.
Do you think the adoption of digital cash has changed because of COVID?
The perception on the masses is changing without them knowing it, really. When you first look in England, for example, your tap and go on your card was, £20. And oops.
Oh, is that me or him? No, it's him, isn't it? Continue.
He's telling a couple of trade secrets, and the NFA is dialing into that.
All right, okay, fair enough. It won't take them long. But it's right what he's saying about cash. Cash has virtually disappeared from our world, and I think internally, effectively, the banks are already using digital currency, but on private ledgers. Is where I was going with that. So, what other markets do we think are going to be affected, gentlemen? And how quickly do we think it's going to come in?
Well, to add to your last point, James, JP Morgan, for example, is one of the first adopters of having an internal blockchain. They even created a JP coin for the sake of settling trades internally for equities, for commodities, for FX. So this is something that clearly has been on the radar for a long time. So I think the first space you're going to see get impacted is the back office components of banking. Sorry. As soon as you have the back offices accepting blockchain as a form of settlement, and you're able to take trades through blockchain rather than through two-day settlements with a clearinghouse, you create the infrastructure to be able to trade traditional assets on the blockchain. And I think that will take a couple of years, obviously, because the build out will take a long time, but it's inevitably going to happen. This is something that will cut the cost of a bank's overhead significantly.
Agreed, but we have to have both the trading and the settlement in real time, because the problems become whereby we all know there are huge advantages to trading traditional financial instruments in real time. And if we can do that, then we can eliminate counterparty and settlement risk. And going back to the global financial crisis, as anyone that's talked to me about that over a beer, the thing that scared me was settlement risk. When your counterparties disappear in that 1, 2, 3 day window, that's when the road to hell opens up in front of you. And if we can get rid of that, and that is a big deal, and if we can get rid of that, the only way we can do that is to have settlement in real time on the far side.
But it's always the easier, swifter, cheaper exercise.
Yes,
and
absolutely.
then comes and all of that under the safety umbrella. And if that is being met, people will have to adopt it. And the avalanche, you can't stop it anymore.
So, what markets do we think go? What markets do we think go first? Do we think it's equities? Do we think it's bonds? Do we think it's repos? Do we think it's alternative assets? Do we think that fractionalization and digitalization of property is around the corner?
My guess would be on alternative assets, stuff that's more liquid and traditionally not trading at such a fast rate. Those are easier to securitize and to become more uniform across the market. That'd be my take. And after that, it becomes more vanilla liquid assets, kind of like equities. So
I think it'll be interesting. Like I didn't hear the previous discussion on venture capital and private equity, but I think it's like this illiquid alternative assets, which has obviously a certain barrier of entry. Here's an opportunity to kind of slice it and dice it into smaller pieces towards people who would want to be in it, who have the mindset of this is not a 2-day exercise, but might be a potentially 10-year exercise, and getting into that and actually cutting your teeth and getting the experiences on these assets will be incredibly helpful. Is like to put then going into the equity world, then going into the debt world, or vice versa, to open it all up.
Isaac, are you back with us?
Yeah, definitely. Yeah, I'm with you. Can you hear me now?
Yeah, definitely. We were just discussing which markets we think we're going to go first. Which markets do you think are going to go to a blockchain-based system first, be it bonds or equities or repos or FX or whatever?
I think we heard obviously earlier, Ori was saying about illiquid markets. I think I definitely agree with them. They're the first ones there. FX, I think, is also round the corner. We're looking at doing that multi-bank. There's a lot of banks, as I said, who are doing it when we're trading with Signature Bank. When we look at our LPs, we settle with them, and we look at LPs who also bank with Signature, just so that we can use their blockchain. And I think that kind of quick access to settling and creating a good relationship with your partners can only benefit all parties. So, as I was trying to say earlier, as we use this technology and people get to know each other, then they're just going to look at other options of what they can use it on.
I think James, that might be a very interesting point. What Zach just said is like once people get to know each other.
Yes.
Because I think that's the big issue in that. It's like, look at a bank where every quote unquote account holder only has digital crypto in there. The bank has no idea what these guys are all about. How could they possibly give a credit line to any of them? So once you actually start knowing your counterpart and you build that trust and you build that relationship and you get a feel for, what is my security behind doing transactions, doing deals with that counterside, I think that will open up the market tremendously.
Absolutely. This is actually something we're working on. Sorry. With the leveraging of NFTs, we're essentially able to do that. So we've tested it out on art where we digitize deed on physical pieces that shows you the ownership history. You see your counterparty. So now if you're buying a piece of physical art, you actually know where it's coming from. And there's much more transparency in that market. What's going to be interesting now is how people start leveraging NFTs on other tangible assets that are more traditional investment tools, and how you can literally use an NFT as a form of collateral.
Yeah, but if you create an SDO, if you create a security token, even via an NFT or in any way, for it to be a tradable security, it has to be custodied inside a CSD, a central security depository. And currently, there are no securities depositories that can take digital assets. Now, I believe that Goldman Sachs have found a way around that, and that's how they managed to do the deal on the 26th of April. But still, for the rest of us, it seems to be something of a problem. I believe that's why that was issued out of France, by the way. They seem to have found a French loophole. There's always a French loophole, isn't there?
It's like Ori is about to take away all the internship credentials for anybody wanting to go to Sotheby's or Christie's. So they're all suddenly these PC averse people there. So, but it is fascinating.
Once we can come up with a way of legally doing these deals and creating NFTs and creating digital representations of real world assets, then a lot of things start to open up from a really dull point of view. And we're going back to the bogs and drains of the industry. If you take an illiquid asset that's held within say an insurance company, you have to put capital adequacy against it of 4%. Now, if you can prove to the regulator that's a liquid asset, so you digitize it, fractionalize it, and you manage to sell part of it off to create a digital asset. Let's say we're talking about a shopping center. You actually create a liquid asset out of a liquid asset. Then your capital adequacy goes down to something like 4%. I mean, it's a big difference. And so there's part of me that wonders whether this is going to be driven by the need of people to have more functionality from their cash, the need of the investment banks to be able to settle faster, cheaper, and more efficiently, or whether it's actually going to be driven by the fact that there is no yield in the world and the world will do anything to cut its costs. And by the world, I mean the fund managers. Do you think it might be driven by fund managers, Zach?
Well, first of all, it's got to start somewhere. But I think, to be honest with you, in that sense, yes. But on another sense, in terms of like, as you're saying about, illiquid assets and putting up collateral, it's going to be much easier for the mass audiences and your average Joe to kind of get hold of BTC if he's made, good profits in it in the past, to put that up as collateral, and it breaks that barrier down instantly. So, there's always, one hand that washes the other. I don't think the fund managers can do it just by themselves without everybody else.
Do you think there's a place for the digital currencies that we have now in the traditional financial markets going forward? I mean, for instance, for Bitcoin, we're going to have to talk about, but also Ethereum. The fact that the bond that was issued back in April by Goldman Sachs was issued on Ethereum. Do we think that they're going to adopt some of the technology and some of the protocols that we already have?
I mean, it's working, and I think it's a learning curve, but it seems to be very stable. I think it's fantastic. Forefronts like the Goldman exercise is going on to that and actually giving it a proof or giving it a seal of approval, at least at that point, and saying, that's best of class as we currently see it, and that's why we decided for it. And probably in 10 years' time, the world might look very different, but at this point in time, that's the best one. And so I think we'll continuously learn from that. I'm sure, this whole discussion about, taking the euro digital, will have a very diligent look at of what's happening behind Ethereum and others.
I haven't actually read that yet. What is the timescale that they're looking at? Presumably they're starting a working party, which means they're going to go and finger painting in the woods for a couple of years first before they actually bring out.
If you take the British view, is like without Brexit it wouldn't happen, and if you take the European view, it's like let's have Germany come up with some good ideas and then we criticize it as long as we possibly can.
There's a lot of rumors that Canada could be first, isn't there?
I think the Canadian side is incredibly entrepreneurial on that, and there's a reason why GDA sits in Canada and not in Monaco.
Yeah, you're probably right. Apart from the fact we'd never get off the boat. So We think there's a place for maybe Ethereum in the new financial markets. We think there's certainly a place for Bitcoin. We can't put the toothpaste back in the tube now, can we? That's going to continue. Do we think there's going to be a continued adoption of that as a store of value, as opposed to more traditional stores of value? Go on, Ari.
I mean, just before Ari goes in, I'll just say that, obviously we had Aaron speaking before this, and it was interesting to hear him talking about diversifying his portfolios and them having a number of different assets. And I think, obviously with BTC and kind of the hype that it's got, they're definitely going to be looking at holding it as a store of value, just to, in case of when you look at diversifying your portfolio, it's got to be top of the list from my point of view.
Yeah, and to add to that, also, we're going to start seeing a lot more leveraging of DeFi models and DeFi assets, because parking a deposit account in Europe isn't earning you very much. There's almost very little benefit. So leveraging DeFi models with a partner or with a market that is reliable is also going to be a huge value. And the banks are absolutely looking at that. But how many banks are capable of developing it? How many banks can convert their users into DeFi users? It's a relatively difficult thing. It's going to be slowly adopted. But if the banks are, in my opinion, if the banks are able to start acquiring blockchain partners and smaller players in the space who have a reputation of developing these kind of platforms, you're going to see a gradual adoption of DeFi as a store of value.
And my view is like it's going to be such a wide market where you adopt it that the banks will be unable to actually somewhere get around it. They will be unable to really sit it out, because it's like if you miss the train now, it's going to be so much harder to catch up in 12 months time or in 18 months time. So it's going to be a matter of do that first step, take that risk capital, and place your bet onto a team which you can support for the years coming.
I just came back from the Bahamas, where we were literally just trying to build this out with the monetary authority and with a couple banking partners. So people are looking at this very seriously. They just don't know where to start. So when crypto firms come into the game and they start educating not only the retail users but also the banks on how to develop it, how to teach people how to use this, and how to integrate it into more retail focused platforms, the banks are absolutely going to start adopting.
Yeah, but they should start.
They'll buy the smaller companies. They'll do what they always do.
Exactly. This is what Amazon does. They do it on a daily basis.
Or they should just start as like running. Sorry, Zach.
Go on, Johannes. No, you go first.
No, but they should start running. Is like, where do I pick up the customer, and what is that life cycle of my customer? So what are the different steps I have to take on that? And the one biggest issue for the banks is always like, the KYC. Once the KYC is signed off, that safety cushion comes on top of it, then you open up for that discussion. Then you have to listen to your customer. What does the customer need to have? What is the bare minimum? And how can you fit it into your store? And, there might be some acquisitive strategies in there, because there are these niche players becoming incredibly powerful and very knowledgeable, but probably at the moment, flying a bit away from reality, because they are too much specialists. And the art of the fact will always be how to integrate it successfully.
Absolutely. But the main hurdle I'm realizing for the banks is that they're also restricted as to what they're allowed to hold on balance sheet. Once you get past the hurdle of the regulators and the central banks, and you educate the central banks enough to start touching the blockchain space, then you open the floodgates. But until you get to that point, it's very, very slow.
Yeah, the regulators can only regulate what they're told to regulate, and we've all dealt with regulators, and I'm sure, Zach, you've done probably more than I have, and they are woefully behind the curve on most of the things, aren't they?
Definitely. I mean, Max Digital is regulated out of ASIC, which is Australian Securities and Exchange Commission, and the guidelines are there. Security is there, but they're definitely needing somebody to consult them on the further steps on how to make it better and more, understood, because a lot of them don't really understand the concept of crypto and blockchain. And then when you look at the banking side, bankers are going to have to, adopt this, because when we look at what crypto is doing, it's basically cutting them out. And we all know bankers, they're not going to want to lose, their share of the pie. So they really have no choice.
Blockchain is to get rid of middlemen, and the largest middlemen in the world are banks. So it's bound to gravitate towards them, isn't it?
Yeah, I'll give you another small example. At Mex Digital, we're looking at getting an MCN license, which is basically a payment service through YouTube, and for people who monetize their channels. People, let's say, for example, in Iraq, they can't really cash out their funds from YouTube, because obviously the situation in Iraq is as it is with the banking society. So if we go and create an MCN that's fully compliant in terms of KYC and regulation, which is easily done through IDs and so on and so forth, and then give them a way to not just cash out their funds instantly and quickly, but to be fully transparent of where their funds have come from as well. When a bank looks at that and says, okay, hang on a second, we've not been able to do that before, but yet they're doing it now through crypto, they're going to want to get involved.
But here comes the argument. You're becoming a merchant bank. It's like as they were 200 years ago. It's like where the banker has his special field and listens to the entrepreneur and says, what do you need and how do we make that possible? And that's going to be the same exercise here again. It's probably just with a bit more fancy wording, but ultimately it's merchant banking in its purest source.
Yeah, with a few buzzwords attached to it.
Yeah, so no, it's absolutely fascinating to see, but it's ultimately it goes back. It's like the client is king,
and the client doesn't care how things work. We've all got an iPhone. Most of us have got an iPhone.
Yeah.
I haven't got a clue how it works, and I don't care. It's all about the experience and what I can do with it, isn't it?
But the traditional banks can improve the experience significantly by adopting this. This is what I struggle to understand, why the banks are so slow to adopt it. Because if a bank is capable of cutting out half of its back office and half of its settlement teams, then they can offer better pricing, better settlement times for its users, even better yields on savings accounts, purely because they're saving so much. So the bank's product offering improves significantly if they're able to do this.
Yes, but what you get is when you walk into someone like, I don't know, the London Stock Exchange or Barclays Bank or others to talk about blockchain and cryptocurrencies, the guys right at the very top are really, really enthusiastic about how much you can do for shareholder value. And below it, there's a huge marzipan layer, and that marzipan layer is still trying to become the top layer. And the last thing they want to do is, if their head of settlements is see their department completely decimated. So they're not going to vote for it because turkeys don't vote for Christmas, and that's always going to be the thing that slows this down.
Exactly. Yeah. So while I was at TD, I built out an incubator for equity settlement trades over blockchain. So entirely internal trade settlement on blockchain, and it was extremely basic. It was only on one desk, and the moment the back office realized what we were creating, the bank actually shut down my entire project. So they're well aware of it, and this was 4 years ago. I tried doing this.
So do you think the mainstream organisations and even the mid-level organisations actually realise what's coming and how devastating it's going to be, or not?
I think very few of them really understand to what extent blockchain will change the industry.
Well, I totally agree. If you talk to traders on desks, even heads of desks, around the city, anywhere in the world, they have no idea what it would mean if their desk went digital overnight. Not a clue.
Yeah.
No, but it's such a massive step. I mean, if you think back, it's like when there was the open outcry trading stock exchange on the trading side, and when that vanished overnight, it's like people thought the end of the world was near. And this year is just a massive bigger step, because suddenly everything becomes so much simpler, and there comes the typical human psyche of, will I still be used somehow? I.e., should I not start defending that I might be recycled?
Yeah. Well, this is where you start separating Bitcoin, which is what everyone knows to be like the epitome of blockchain. And you start actually pulling out the underlier. And once you actually start working with blockchain rather than just Bitcoin and Ethereum, you start realizing where the capabilities stand.
Yes.
And that's what the banks are really struggling to identify. I've spoken to numerous banks about this, and they're like, "Oh yeah, we do crypto. We trade non-deliverable futures." I'm like, "Okay, so you don't really understand it."
Yeah, definitely. One of my favorite quotes is from Henry Ford, where he says, "If we asked people what we wanted, they would have asked for a faster horse." Then then he builds the car. Then obviously everybody's using the car now, and I think that's exactly what you're saying. I mean, that's how I got involved into crypto. I heard Bitcoin buzzword so many times, but then one night a friend of mine kept raving about blockchain. Then I ended up spending all night studying blockchain, and then connected the dots, and I had that light bulb moment of what I think blockchain can do for the world. And I think this is what's going to happen in the banking world, where people are going to come with new innovative technologies to do settlement, to do what blockchain can do, and then they're going to have that aha moment of either we jump on the train or we get left behind.
But I think in these situations, it always takes longer for these things to happen than you think it's going to, and then when they start to happen, they happen faster than you think. So what we'll get is it may be several years before we get it, but when we get it, it'll come in a flash.
I mean, think about the odd example we heard is like from some businesses like who do a lot of work with Mexico. It's like there are more people in Mexico having a mobile phone than having a bank account. And so it's reachability, and it's the masses, and that's what I meant with an avalanche. It's like it starts small, but it becomes unstoppable at one point in time, and if you break it, it just goes the other way around. It's absolutely this is what's happening here, and then it's we all got adopted. It's like so much easier to get on the phone and it's like do your fingerprint or something versus a 10-digit number 5 years ago. And we adopted it, and we don't even think about it anymore. It's a bit the fax machine and the old, now collecting dust in the corner somewhere. So it's absolutely fascinating, and it needs. I think it's the biggest difficulty is to build the bridge between the old reality and the future reality to make them talk to each other, make it understand, and take the benefit out of it. It sounds very much preaching, but it's I think that's always the biggest hurdle.
Yeah, I totally agree with you. I think that's also why I've shifted my focus so much into the NFT space, because NFTs are such a simple way for people to understand a tangible asset on the blockchain. It's a really simple way of basically saying it's just a new way of transacting. And you simply go to an NFT market, you purchase something, and then you take physical delivery. It works like anything else you've ever done, but it settles instantly. Your money is transferred instantly, and you're receiving the same product at the end of the day. And once you're able to educate people enough to understand that and to utilize that, I think we'll start seeing it applied in different areas. But that's why we've started focusing on art, because art's already had high barriers to entry. A lot of asset managers invested in art in the first place, but how many of them really had full transparency into the market? Very few. And now we're just trying to lower those barriers.
I think also it explains things like art in a way that we haven't been able to explain them before. And I think to a younger generation, they can go on and appreciate something that is unique for them. NFTs for me, the possibilities are endless. Be it mathematics textbooks in NFT form to pieces of unreleased music or whatever it is. There's a huge amount of opportunity there, and I think someone earlier on was saying that every single company in the world is going to have an NFT policy, and I think they're absolutely right. Every brand rather is going to have an NFT policy, and yourself, you can see from the amount of sports teams and multinationals that are coming through and engaging with you now. Just to try and figure out exactly what's going on, because they can see that there's something coming down the tunnel towards them.
Absolutely.
Yeah, definitely.
Think about the number of tangible assets you could convert to NFT and then securitize as a basket. You essentially create ETFs backed on NFTs, or you can create MBSs backed on NFTs. There's all kinds of opportunities like that. You just got to show people that it's just a new way of transacting.
So NFT.
And you're going to make it simple.
NFT squared just came into my mind. Is this how we'd actually end the financial markets totally?
NFT 2.0.
But the annoyance will come out. It's like still the same with the old real estate owner. It's like you can't sell it twice.
Exactly.
So no, but it is absolutely fascinating, and it's if you look at it historically, it's yet another trend. I mean, it's like you pick up art. It's like the oil painting is a unique one. It's like the print is a limited one, and then suddenly it's like it's like onto each limited print. It's like you have some particular adequacy on it, and you use it, and it's just a matter of allowing it. It's nearly the liberalization, or to have the common people experiencing something which has been very much put in a certain corner over the past 20, 30, 40 years. And I think it's like on private equity seem to have been such, or alternative assets in particular, private equity seem to have been one of these situations where the buy-in was just too high for people. So, but they always heard these kind of magic stories about it. Now suddenly through an NFT structure, through a kind of a slicing and dicing structure, you can participate in it. And you can get out of it. It's like, before that 10 plus 2 happens to be finished.
But do you think we end up in a situation whereby we have the pink sheets of the United States digitized so that you can digitize and fractionalize the ownership of every coffee shop on every corner, and it'll be traded in the same way as anything else, and used as an asset, and you end up with ultimate transparency on businesses and transparency of their ownership. Do you think that's where we're going?
I think that's where what it could end up. Whether it's going to be lived, it's a different question. Yeah. But it's like this is what it's. The possibilities are there.
Well, I think the possibilities are there because it can help so many people at the same time. I mean, transparency is key here. We're looking at doing something similar with music. And, when creating an album, there's so many different players, from the songwriter to the musicians, to the production company. And there's something like 25% of royalties don't actually end up going to who they're supposed to, and don't get paid. And we're looking at creating an NFT where not only do you buy something that's tangible, but when you buy that as an NFT and it's a limited edition, you also get part of the royalties. So you're actually buying into, your favorite band, and you're getting royalties from them doing well. So then all of a sudden you've connected, a musician to, with everybody around him, but again to his fans. And then, just having so many people involved in a simple way is just remarkable to me, in a transparent and clean way.
That's exactly what we were doing in the art space. We're paying royalties to the creator of the NFT. It's just a method of making sure that the artist is forever rewarded for creating their piece. And imagine you could do the same thing with in the auto sector. Every car already has a VIN, which is a unique number. You tie that to an NFT, and then you finance on it. It's the exact same model we currently run on, just with no more paper.
But it's not just that; it's the history of each car. And the cars I'm happy to talk about until we go blue in the face. But the history that's behind each vehicle. Let's say it's a Bugatti Veyron, and you want to know exactly what it's. If you have an immutable ledger of the history behind that car, that actually enhances the value of the car. And if you can do it for that, then you can do it for property. So when you build a property, it comes with its own passport, and everything that went into that building is verified on an immutable ledger, and it's built up over time. So you can see everything that's been done. How much easier would that be? Honestly,
it's the education side. It's the education side of finding of the confidence. If the consumer is educated how it works, he can gain that confidence, because it's not just one little clerk, something typing into a computer, and it sits there statically. It's like in the safety deposit box in my local bank. But this here is the ledger technology. This is how it works. And I think that's, again, it's educating the early adopters, and then that train will run.
So what do you think is the best way to educate not the early adopters, but the slower adopters? Because that's the hurdle, right? How the early adopters are already into crypto. How'd you get the later?
Money.
How'd you get the other ones?
Money.
It's some people like James, slightly white-haired, being excited about it and talking to their people. So the one above 50, yeah.
All right, don't start, Johannes. All right. No, money is what drives people, and yeah, if there's some way of people monetizing, if there's any way of people monetizing it, then they will. And if we can digitize and fractionalize existing illiquid, cumbersome assets, then I think that's what's going to drive it forward. Gentlemen, I know we could do this all day, but that's probably not how it's going to work, I'm afraid. They're rapping my knuckles and telling me we're going to have to wind up. What can I say? Thank you very much indeed. It's always a pleasure to talk to all of you. And have a great day. Thank you very much for your time.
Thanks for having us.
Thank you, James.
Cheers.
Thanks for having us.
Thanks. Bye.